All right, guys, low cap, no cap, let go. So, first thing we're going to talk about today, and before I get started, just tell everybody how this channel is going to go. So, we're going to talk about news that happened this day last year and this day this year. So, that's going to be the spin on it. We're going to be talking about how how far we've come with the technology, where we are, how the markets was looking last year, this same time, how the markets are looking this year, this same time. Um, just talk about different issues and also talk about lower cap coins. So those videos are coming just to give you a preview of what the channel is going to be looking like. All right, so the first thing we're going to talk about today is President Trump getting COVID. So this was the same guy that I was telling you guys March, April. Oh, it's just the flu. It's going to blow away. Everything is fine. Nothing to worry about. And as we find out a matter of weeks ago, he, in a release call that was taped, he was saying that he was downplaying it deliberately. I've been telling people for a while, since March, actually since February, because I remember I was conversing with someone about it on Valentine's Day. But ultimately, I heard about it because of Box Mining. That's a good channel you guys need to follow. He lives in China, so he got ground level experience, and he was talking about it as it was unraveling. Maybe as early as December, maybe if not January. So he was doing a whole series on that. You gotta check him out, Box Mining. He's a great YouTuber, great crypto YouTuber. Um, just very thorough, has years of experience. I believe he even mined Bitcoin at one point. But back to the current news. All right, so Trump has tested positive for it. And of course, we can't believe it because he said it was going to be all over soon. And look at it, 7 months later. But whatever. So, in the last days of his presidential campaign, the president confirmed that the diagnosis in a tweet in the early hours of Friday after a fundraising trip to New Jersey. The president said, "Tonight at Potus, and I test begin our quarantine and recovery process immediately. We will get through this together." The announcement also comes after Hope Hicks, one of the president's closest aides, was diagnosed with the coronavirus. The president is already under quarantine with prompt treatment from the White House medical staff. So let's just see how the stock market reacts to what was going on. Stock market and, of course, Bitcoin. Following the news of President and First Lady's COVID quarantine, the stock market opened low and Bitcoin is moving in tandem with the stock market Bitcoin correlation. Yesterday, the S&P 500 closed at 3,300, while the Dow Jones Industry average closed at 27,000. Today, both the S&P and Dow Jones opened even lower. While these indices' performance shows no sharp shrink from covered U.S. stocks, pharmaceutical companies in search of COVID-19 vaccine appeared to feel the pressure as firms such as Pfizer lost about 0.90% with a further plunge in the pre-market. Bitcoin appears to lead the losses, dropping by 3.83%, trading at $10,470 at press time, according to CoinGecko. With Bitcoin losing about 9.88% in the past month, expectations of a shift rise in price as well as S&P 500 may meet with road bumps following the impact of President Trump's health status. So this is unbelievable. The markets have been crashing all day. Look at it. We're in the red. The whole market has been going down. Bitcoin actually has been holding up pretty well in comparison to the other coins. It's been a bloodbath. So these rapid tests, what I'm reading, experts been saying that the White House issues out to people around Trump and to Trump are these rapid response, which they're saying isn't as good as the ones you would go to and that needs to be sent away at the lab. So the rapid response ones aren't the most optimal for asymptomatic people. So that's why they said that they aren't the best and the most accurate, and they have been producing false negatives, which this has been apparent since May, supposedly. But anyway, just be safe out there. Wash your hands, wear your mask, and, just social distance. It's not even worth it. Just wait it out. All right. As of right now, I heard that President Trump has a low-grade fever and he was going to the hospital. All right. Let's move on to some more positive news. This is from the Daily Hodl. Bitcoin whale issues big warning to traders. Here's why he believes group of crypto assets are at risk from regulators. A rich Bitcoin investor, aka a whale, is warning the crypto community that certain digital assets could soon be under assault by government regulators. In a new series of tweets, the synonymous trader Joe 007 highlights the news that the U.S. Commodity Futures Trading Commission has charged 3 individuals who own and operate BitMEX, including co-founder and CEO Arthur Hayes, with violating multiple CFTC regulations, including anti-money laundering procedures. The DOJ also filed criminal charges against the individuals. Joe 007, known for placing large BTC bets on Bitfinex, says he believes regulators won't stop there and crypto traders should prepare. He points to the new crypto asset Uni, which is the governance token of the decentralized exchange Uniswap, as the type of coin that will likely be scrutinized by U.S. authorities. In this tweet right here, he says, how long do you think it takes for a SEC to take a hint from CFTC and turn their attention to something like, I don't know, illegal, unregistered securities like Uni? And then he links a podcast with Jack Dorsey, which is the guy who brought you Twitter, brought you Cash App, And I mean, he's a Bitcoin advocate, so he's definitely worth a listen. But I kind of disagree with him. So I'll expound on it more. But let me finish this article. So while some argue that Uni should be subject to U.S. securities regulations, Phil Liu, the chief legal officer at the digital asset management firm Arca, says he doesn't think the asset will have that issue. Liu says the tokens don't meet the Securities and Exchange Commission's test for securities, which the network is no longer controlled by the Uniswap team. He also notes that the Uniswap team never raised money through a token offered to create the network, and that only users, team members, investors, and advisors were entitled to receive Uni initially. So I'm in agreement with the latter part with Lou, of course. But ultimately, the developers don't have a large percentage of it. It was fairly distributed amongst the community, unlike Sushi Swap, unlike all these other tokens, farming tokens or governance tokens, where you farm these tokens and they give you governance tokens, which allows you to vote on where you want the protocol to go. So the community accumulates these tokens, and then that allows them to vote because they have that power through the tokens. And Uniswap airdropped it just to people that utilize the wallets, and it wasn't kept for a percentage, wasn't kept for development as a lot of these other farming and governance tokens have been in the past. So I doubt the SEC is going to go after them. They definitely will go after other smart contracts that are being that the developers or the owners have the master keys or still have a certain amount of control over those. So if I were you, I would get in and out of those smart contracts as soon as you could. It's just my estimate. It'll probably take a little while if they do, but I believe your Uni token should be good. But who knows? This is not financial advice, but just keep an eye on it. I would probably, like I said, get into a stable coin, take your cash it out, put it into a stable coin, get it out of a smart contract, because you don't want to get stuck with your coins in the smart contract and the devs all leave and your money is stuck, possibly. All right. So we're going to Coinbase offers instant withdrawals on US, UK, and European platforms. Now, this is published 3 hours ago on October 3rd. It's October 2nd here, so this must be in another country. But yesterday, I was able to take advantage of it, and I'll tell that story a little later. But cryptocurrency exchange Coinbase announced in a blog today that it now offers instant withdrawals features to its customers in nearly 40 countries, including the US, UK, and more across Europe. While some users welcome the move, other Coinbase traders complain about the platform high transaction fees. In fact, in the US, Coinbase deducts 1.5 from the transaction, or a minimum 55 cents for a small transaction. In the UK and Europe, the instant withdrawal feature is available for a 2% or a minimum fee of 45 in the UK, 45 cents in the UK, and 52 cents across Europe. One Coinbase user on Twitter stated. The 2% fee is a tad steep for what is all intents and purposes a fee for something other exchanges do already for far less, and why the difference between US and UK customers. Coinbase allows either MasterCard or Visa debit cards to facilitate the withdrawals depending on users' country of residence. Customers in the US, UK, and Europe can withdraw funds with a linked Visa debit card via Visa Direct capability. In the US, customers will be able to withdraw funds with their MasterCard with MasterCard Send. So I was able to withdraw yesterday because I was out with my team and we were at a team builder and I wanted some more additional cash to stunt. But so I go in there and I see they have an instant withdrawal. So I said, oh, okay. And then I go through with the purchase. And like they said, they charge you 1.5% fee for US, which I thought was kind of was kind of steep. But at the end of the day, you got to pay to play, right? There's other ways you can get it out if you go to a Bitcoin ATM and things like that. But obviously, there wasn't a Bitcoin ATM. I was at Main Event and they don't have a Bitcoin ATM. So that wasn't an option at the time. So it is cool because it used to be 1 to 3 business days, I believe. So now the instant transaction is pretty helpful and pretty advantageous for different scenarios. I think they should have been had something like that, but whatever. At least they have that option now. So I don't advocate for Coinbase, but I do like the convenience of onboarding and offboarding into certain ones. But obviously, not your keys, not your money. So I would suggest getting into something like Exodus or other wallets. It just makes it harder to onboard from fiat to crypto to crypto to fiat. So that's where Coinbase comes in. But we will discuss more which ones are the better wallets as far as the bridge between fiat and crypto and fiat. All right, moving along. So now we're going to go 2019. Hong Kong Bitcoin trading volume spikes to highest level ever recorded. Interest in Bitcoin seems to be booming in Hong Kong. Local Bitcoins recorded its highest trading volume ever in the city-state this past week. The protesters in Hong Kong have been called the first uprising fully attuned to our modern technocrat age, with the Chinese government trying to track protesters through surveillance and usage of payment apps. Residents are going dark. Many are now trying to make themselves invisible to avoid a possible state crackdown. So it's no surprise that interest in cryptocurrencies is also growing. Previously, reports on Bitcoin rising in popularity in Hong Kong seemed to be premature, as being crypto previously reported last month there was no significant increase in Bitcoin trading in the city-state. However, the trend now seems to be changing. So those who don't know, Local Bitcoins is a popular platform for direct trade in Bitcoin. Peer-to-peer posted its highest trading volume ever in Hong Kong last week. Matt Greenspan writes that the exchange recorded around 13 million Hong Kong dollars exchange in just the past week. Bitcoin is still considered a risky asset in Hong Kong, but something seems to be brewing under the surface. Although it'll be difficult to argue Bitcoin has proven itself to be a safe haven, quote unquote, just yet, it does possess certain fundamentals that would be attractive to protesters. And those who don't remember, China was protesting last year, and I always speculated that they may have came out with the virus just to get people off the street and scare people off the street from protesting. Because if you recall, they were all in the airports, sitting down, just everywhere in the streets. A lot of the times they were non-violent protests. So cryptocurrencies and protests. The cryptocurrency space and the Hong Kong protests would seem on the surface to be natural allies. Given that the Chinese state monitors its citizens through their spending habits, cryptocurrencies allow citizens to move to an altogether different form of way of transferring value that's not backed by the state. Although previous reports of protesters turning to cryptocurrencies were false, they weren't off the mark entirely. They were just premature. Now it seems that part of the troubled country is actually turning to cryptocurrencies as a means of financial independence. So if you want your sovereignty, if you want financial independence, if you want censorship resistance, then you will basically opt into Bitcoin. If you want to get out of the system where they're printing money and the inflationary and get into something deflationary, of course, buy more Bitcoin. I've been telling people this is critical so that we can protest, we can opt out of the games that they're playing. No matter what country you are, Bitcoin is global. It's global currency. It's borderless. It's immutable. It's unstoppable. All right. Ikea began using smart contracts on the Ethereum blockchain. Now this company was the world's first and only authorized company initially to authorize Ethereum payments. So basically, Tradeshift, the leader in supply chain payments and marketplaces, and Monerium, the world's first and only authorized provider of licensed e-money for blockchains, announced a successful completion of a transaction that marks a major step forward in business payments and finance. So what they did was they used smart contracts on Ethereum blockchain and was able to program e-money and was able to track it in the whole process, where each person in the supply chain or each entity in the supply chain was able to get compensated in a timely manner through programming of smart contracts. So programmable money regulated by governments will become the foundation for e-commerce payments because they enable so-called smart contracts. Smart contracts have many use cases. For example, they can be used to generate smart invoices, which are invoices that basically settle themselves. We see smart invoices not just as useful for lowering administrative hurdles in business to business cross-border transactions, but for building new financial models that makes it easy for enterprises to improve access to credit and improve cash flow. That is why we have built the world's first smart invoice and now settle it with licensed digital cash together with Monero. This is an important step forward. Gartner predicts that blockchain and smart contracts will have transformative impact on a 2 to 5 year horizon hype cycle for multi-enterprise solutions. IMF foresees blockchain-based forms of e-money enabling seamless payment of automated transactions and substantial efficiency gains from back-office tasks. As the first company authorized to issue e-money on blockchains, we are delighted to demonstrate the benefits of blockchain for mainstream B2B transactions using a legal form of digital money. Unlike cryptocurrency, which is volatile, e-money is a proven digital alternative to cash, regulate, and redeemable on demand. Using programmable e-money and smart contracts herds a new category of payments. With Smart Invoice, we can issue tokens that represent the future cash flow down to each dollar on the invoice. Whoever holds tokens will get paid upon due date, which makes Smart Invoices ideal to use for financial service apps. So this is incredible. So just to dive deeper, if you had a smart contract, which simply put, you can think of a vending machine. If you give it money, then it will give you whatever product you get, A, B, C, whatever it is. So that's the same thing how the smart contract works. It inputs data, and you don't have to interact with another person. It's automated. As long as the contract is written correctly, whatever it is, it will be executed. That's why it's called programmable money or programmable smart contract. But to further the scope, with smart invoices, short-term credit to small and large companies can be delivered automatically. If you sell the tokens back to the buyer, you basically have dynamic discounting. If you sell them off to a financer, you have a supply chain finance. If you use them as collateral in order to provide a finance to sub-suppliers, you have some called deep tier finance and what we call ecosystem finance. You then avoid double dipping, finance fraud, which is when the supplier sells the same invoice 2 or more times, because now you can only sell a token once. So what this is saying is it will stop double dipping the financial fraud. So just like Bitcoin stops the double spend problem, which is I can spend my money here and I can spend my money somewhere else simultaneously before the transaction is processed. Bitcoin saves that. Bitcoin stops that because of the way Bitcoin works. It doesn't allow you to double spend. Only one person can have one Bitcoin at one time. So it doesn't allow you to cheat the network. So now with the smart contracts, with the smart invoices, this can stop the suppliers from selling the same invoice 2 or 3 times because you only can sell the token once. So just like Bitcoin stops the double spend problem, smart invoices stops the double dipper problem where they're committing fraud by charging multiple people or multiple suppliers the same invoices. So it solves that problem, which obviously is a major problem and will reduce fraud. Stephen, CFO of Ikea, Ison, said a programmable finance supply chain where trading partners can connect information flows to money flows through smart contracts, which transform how suppliers and customers interact. Where trading partners can connect information flows to money flows through smart contracts. Wow. Information flows to money flows through smart contracts. So the different parts of the supply chain, as the information flows to the next part, we can track this. We can make sure that people are getting paid proportionately. We can make sure that people aren't charged fraudulently. So this actually cuts out a lot of fraud that goes on because we could track the information as well as we could track the supply, as well as we could track who should get what as far as the money flows because of these smart contracts, which couldn't be done before. Last thing, combining e-voices with programmable money has significant global impact and outreach. So a lot of companies probably doesn't want this to be implemented because it provides more fairness, and obviously it will take more from their quote unquote bottom line. But that's why crypto is so disruptive and beneficial. All right. So one last article for today. All right. So USD coin on Coinbase is starting to offer rewards for crypto holders. So I remember this. I invested. I put some USD on there, and it wasn't bad. I don't know, maybe 10%, 8% at first. And like I said, this was 2019, just recently, a couple months ago. Okay, with USDC rewards, people will begin earning 1.25% on every USD coin they hold on Coinbase. Now, I thought this went up. Maybe it just went down to 1.2%. But now it's ridiculously low. It's way less than a percent. So they brought this out, and with less than a year, they lowered the rewards so low that it's not even advantageous to keep your USD coin on there. For those who don't know, USD coin is a stable coin backed by the US dollar. Every USD coin is worth $1 and can be redeemed for cash. The coin also functions like cryptocurrency and can be sent everywhere with no fees. And now that also is not true. Now with Coinbase, they charge fees. Like I sent my USD coin just the other day. They just started charging people transaction fees because the Ethereum network started becoming flooded, and the transaction fees were crazy high. So Coinbase was eating those fees before, but due to the DeFi craze and farming, they just started charging customers maybe a week or two ago, which I think is ridiculous just to move your money around. Um, which is even more reason why, um, you know, we need to skip the middleman and become more non-custodial instead of having custodial Coinbase manage our funds and tell us what we can do with our money. But like I always say, not your keys, not your money, or not your keys, not your crypto. So the best thing to do is get your a non-custodial wallet, Exodus, Ledger, Nano. All of these are good, and they actually have better. They actually have better returns because they don't have these third-party um, companies taking additional money from you. So, like I said, guys, check out DeFi Post. You can earn income. So, right here, now you get 4.5%, depending on which asset you have, that changes. You got Wrap ETH. So, as you can see, Wrap ETH and Cream is paying you 8%. Wrap ETH on DYDX pays you 0.04. Now, DAI is a stable coin, just like USDC, just like USDT. Now, let's look at BAT. BAT you get for free from BAT browser. So if you guys are buying BAT, it doesn't make sense. BAT is something you can get free for just surfing. Now, I use BAT. I use Brave browser. But Google Chrome, it seems to work better for what I'm trying to research. All right, so let's look at, you got Wrap BCC. So this is BTC, this is Bitcoin, but it's Wrap, so it works with the Ethereum network. As you can see, you ain't getting no returns on that. Not even worth putting in. All right, so these are the synthetic tokens, and not a bad return, 6%. Like I said, these are variables, so they will change periodically. Now, Psi. Oh, okay. I was about to say, hold up. Now, I still have that. That was when we had Compound, and this was the original, like, farmers, where you would put your assets, lock your assets up, and you would accumulate Psi, but then they moved to DAI, which is multi-collateral. Psi was single collateral, but anyway, let's look at Stinky Linky. Okay, here we go. All right, so I still got my Linky on Cream, so that's what's up. I'm accumulating that. That's what's up, 9%. All right. So like I said, you guys gotta check this out. You gotta check DeFi Posts out. Very intuitive. Tell you your interest rate. You can look at some of the best place where you can lend your coins. All right, guys. So if you like my content, like it, subscribe. Of course, I'm gonna be consistently putting out more content. We're gonna start doing a little more about coin reviews. Of course, we're gonna still cover the news. The uniqueness about this is you're able to see market sentiment, how the market was doing last year around the same time, how the market is doing this year. So it can give you, insight on, how the market was doing. May even give you hope on being optimistic on the market's rebounding, or it may just help you keep stronger hands and stay motivated and not react to the market dipping whenever the president uh, tests positive. It allows you to remain optimistic that markets go through cycles, and you know you got to capitalize when you're in the bull market. Capitalize, take those profits. It's never wrong to take profits. You just don't want to be that person who the profits go up 400% and then they drop, and then all of a sudden they wreck, you know. And it doesn't feel good when you see your money, your portfolio going up, and then all of a sudden you get wrecked. So at the end of the day, that's why we say it's never an issue. We never argue with you. It's never wrong from taking profits. Even whales take profits. All right, guys. No cap, low cap. Tune in, like, subscribe.